Hey Sam, can you hear me?
Loud and clear. Loud and clear.
Okay, cool.
Yeah, so what I was saying is that if I give them the option, whether they want to do face-to-face or virtual, then I have a much better chance of getting their information. And the ones that say face-to-face, I'm only going to be buying leads in you guys' area. So, they'll be more than likely, and I'll send one of you guys to do it. And once you get there, if you need my help, I can even be available through Zoom. You know, if like, really, there's no way you could lose. You're not buying leads. You're not even setting appointments, and I'm going to be there for you through Zoom. So I'm only going to do that like maybe once or twice for you guys until you get comfortable with it. But once you have the presentation down packed, then you should be able to do it yourself. So you guys can see this form, right?
Yeah, I've seen it in the past.
Yeah.
You guys have the form?
No, I don't.
No.
Corey, you don't have it, right? You just literally started with us. I'm going to email you guys this form. Actually, you can also get it on the website, but I'll just email it to you. Okay. So let me tell you, when we sit down with our people, this form is basically like we run the appointment through this form. And this form will literally handle all the objections for you that you're going to get. Okay. So the presentation starts like this. And by the way, like, have you guys ever done mortgage protection? Any of you guys?
No.
No,
Corey, have you ever done it?
No, I haven't done it.
So this is a good presentation. I decent amount of business, and at the end of the day, like these people, they don't really know anything, and it's up to us to really lead them. Now, this form is going to kind of guide you through the presentation. So basically, when I first start out with this form, there's a couple of things that, and I'm recording this whole presentation, so you guys, because there's certain things that I say that are not on this form, but for the majority of the presentation, this form is what you're going to use. So, and the other thing is that when you use a form like this qualification form and you're asking questions, they're more likely to give you the answers because it looks like you're doing an intake form. It's an intake form, right? It looks more professional. You're not just writing it down on a notepad. It looks like you're actually like, they're more likely to answer your questions. So what I tell them in the very beginning is I don't really build much rapport. I just tell them at the beginning that, hey, and it's exactly in this order that I'm about to lay out for you guys. And if you follow, the structure, you shouldn't have too many problems. So the first thing that we do is I open up my binder, show them my license, and I explain to them, look, and then I show them to the credibility sheet. And I show them, look, we work with all these insurance companies, and, we work with some of the top insurance companies in whatever state they're in, like Florida, Pennsylvania, whatever state you're in, we work with some of the top insurance companies in this state and the United States. So this is my license. I'm required to give this to you because I am licensed and regulated by the state of Pennsylvania, by the state, whatever state you're in, right? And then I just show them the form that they filled out. And I'm going to just pull up a copy of that form. I'm going to have a stack of those forms with me. So whatever form it is, yeah, you got it. There you go. There you go. I want to show the other guys what it looks like. So this is what they look like. It has their handwriting on it. They can see. Let me just download this. Okay, so as you can see it has their mortgage amount. It has the name of their company, Carrington Mortgage Services. They wrote their, they put their initials on it, they put their phone number, their date of birth, right? So what I'm gonna do is I'm gonna tell them, I work with a company called Advantage One Brokers. We work with your lender and, we help people do mortgage protection. So I show them the form, and the first thing that I wanna ask them is like, look, I know you filled this out a little while ago. Did anybody ever come by and talk to you about this? Did anybody ever come by and talk to you about this? And some people you'll be surprised, the majority of them will say no, right? But the reason why nobody came is because they never answered their damn phone. So when, they filled out the card, they're like, no, we filled it out. Nobody came, nobody talked to us. Yeah, because you probably didn't pick up your phone when they were trying to call. And most brand new agents, they're only going to call you once or twice and then they're going to give up. When you're a seasoned agent and you understand that you got to call these people like 10 times for them to get them to pick up the phone, most agents don't do that. So it just tell them like, hey, this kind of fell through the cracks. I'm not sure what happened. Maybe it got lost in the mail, but I'm here now. Okay. So what kind of inspired you to fill out this form? Like, what motivated you to fill out this form? And they're going to start explaining to you why they filled out the form. They'll just say, oh, because, I just bought this house and I don't want, if something happens to me, I don't want this to basically, I don't want my family to lose this house. So you dig into the why. Ask them, like, why is this important to you? Like, explain to me, like, if it's a husband and wife, you're going to turn to the wife and you're going to say, hey, Jane, why, paint me a picture like your husband John doesn't wake up tomorrow. What does that look like for you? Like, how's that going to affect you financially? So, just get them to talk. You got to ask them questions, get them to explain, because when they're doing that, they're selling themselves. Now, once you get past the why and you start getting into this form right here, the next thing you're going to ask them, you're going to tell them, look, my job is real simple. I need to do 3 things today. Number 1, I need to find something that's affordable for you. Number 2, I need to find something that's comfortable for you. And number 3, I need to make sure that you understand this product. Okay? So affordability has to be real comfortable and you need to understand what this is. If I can get you, if I can do those 3 things, any reason, Bill and Mary, you would not move forward with this. So I'm getting a commitment from them up front. That's a trial close. Getting a commitment from them up front. So they're going to say, yeah, no, of course, we're going to move forward. So then you start asking them the question. Okay, tell me, I'm going to explain to you what mortgage protection is and what mortgage protection is not. And this is handling the objection where people are going to say, they may not say it, they may not voice this, but they're thinking it in their mind where, oh, but I have something called mortgage insurance. Do I need this? So you're going to handle that. So let me tell you what this is and what this is not. This is not mortgage insurance. Mortgage insurance is something that you have on your mortgage that protects your bank. If you cannot make your payments, your bank is protected. It's not going to protect your family. So this is not that. God forbid something happened to you. Do you want the bank to get the money or do you want your family to get the money? Obviously, they're going to say my family, right? Now, so that's mortgage insurance. If you owe more than 80% of the value on your house, every time you buy a house, they make you put mortgage insurance on the mortgage. So that way, if you default, the bank is covered. It's insurance for the bank, but you're paying it. Okay? So, let me explain to you what mortgage protection is. Mortgage protection is something that covers the mortgage on this house, and it's to protect your house for your family, not for the bank. So God forbid something happens, your mortgage gets paid off. Now, depending on like, you know, how old these people are or budget wise, because we want to make sure that we help them understand, like, you know, budget is our most important thing. So we don't, you know, Bill and Mary, we don't, I just want you to understand, a lot of people, I'm going to explain to you what most people do. You don't need to protect your entire mortgage. You don't need to cover your entire mortgage to protect your mortgage, okay? Because again, we talked about affordability. We want to make sure that this is as affordable for you as possible and it makes sense, right? So you don't need to cover your entire mortgage with mortgage protection to protect your mortgage. We can still protect your mortgage. We can still protect like 60 to 75% of your mortgage and keep it affordable than you having to spend a lot of money. And it just depends on your budget, right? So let me explain to you what I mean. Like right now, your mortgage is, you know, whatever, it's $158,000, right? So do you think 10 years from now, your mortgage is going to be $158,000? No. Why not? Because it's going to get paid down. You're going to be paying into the mortgage. So you don't necessarily need to cover. I mean, if you want to, that's great. But I'm just explaining to you that you can still get the same thing accomplished without having to cover your entire mortgage, you know, just because you couldn't afford the entire payment. So far, you know, does that make sense? Yes. So you're just handling objections. Right now, you just handled an objection where they might say later, like, well, I want to cover the whole mortgage, you know, but you can't afford to cover the whole mortgage. You can only afford like $100. That's only going to cover 70% of your mortgage. But that can still work. So you're basically handling that objection up front. So next, so you move on. So now you explain to them what it isn't, and you've already like set the stage for if you show them a program later on, and it's only like, you know, 60% of the mortgage because that's their affordability, they're still going to buy. They've already bought into it now, right? So now you start asking questions about their mortgage, and you start asking them, okay, how much? This is where you start filling out the form. What's the loan amount on your mortgage? What's your monthly payment? I always ask them, in addition to this form, I ask them, look, do you know what the value of your house is right now? Yeah, I think it's like, I don't know, like $200,000. Make a note of that because you might have to use that later. So your house is worth about $200,000. You owe $158,000. So that means you have about $40,000 worth of equity. Do you understand what that equity is? And get them to like follow with you. If they understand it, then just move on. Okay. Another question that I ask that's not on this form is, are you paying anything on the mortgage every month? And the reason why I ask that is because if they're making an extra $100 payment, right, and they're young enough, we can show them a return of premium. We can show them a return of premium product. And we just found $100. So you're putting away $100, but why don't we put $100 towards this program where you have insurance now, you have all these extra benefits, you have, you know, you have a savings plan where you get that money back at the end of the 30 years or whatever, 20, 30 years, or however long your mortgage is. And if you were to just put money in the savings account, you know, you're not gonna really earn any interest. It's not gonna really have any benefit for you. I mean, if you paid out, I'm sorry, not in the savings account. If you paid out this mortgage and you're adding an extra $100 to that mortgage, that money is going into the mortgage. But if you need to pull it out, you really can't pull it out. And if you lose your job, that extra money is gone, right? That extra money is gone. But if you put it into this plan that we're setting up for you, not only can you make the extra mortgage payment, but your house is protected, and you're going to get all these benefits that I'm going to go into later on. So it's just an idea, right? It's kind of like to get that extra money and help you fund your mortgage protection policy. So you move on. You finish the health questions. I mean, you ask the financial questions, and now you're going to ask them health questions. You're going to ask them all the health questions, and the reason why you're going to ask the health questions is because you don't want to talk about any mortgage protection benefits before you get their health. Because if you ask them that, then they're not gonna, they may not qualify for it. And you made all these offers to them, right? Where they may not even qualify for it, and now they're gonna get pissed off at the end. So you get their health questions, assuming they qualify for the mortgage protection. Like if they're younger, they don't have any health problems. Now you start selling the benefits of the mortgage protection. And the way that you sell them is, you'll ask them a question like, so now that in your mind, you're thinking, now that I know that these people will qualify for it, I'm going to start asking them like a lot of questions that are going to really start selling that plan. So what I'm going to do first is, okay, so, I have to ask these financial questions. Do you have anything right now, God forbid, if you were to become, let's say you could not work anymore. Let's say you got into a car accident or something, you cannot work anymore. How long before you're in financial trouble? Basically, I'm asking them, without coming out and asking them, how much money do you have in savings, right? So that seems a little bit more like aggressive, but if I just say to them, if you got into a car accident and you could not work, how long before you're in financial trouble? So we already know that, how much their mortgage is, so we can just kind of estimate, 3 months. So you already know that they have 3 months worth of savings. And then after that, they're pretty much done. So 3 months, right? And what happens after that? Like after 3 months, based on your current plan, how's that going to play out for you? And just stay quiet, let them talk. How's that going to play out for you? So they're going to start saying, well, I don't know. Okay. So here's the thing. When you are in some type of health situation where you can no longer work, let's say you had a heart attack or let's say you had stroke, if you had a heart attack or stroke, according to the Heart and Lung Association, you're more likely 85% chance that you're actually going to live. So now you have a health issue. You can't work, but you're still alive, and you don't have any money. So with this plan, we have what's called living benefits, where it'll pay for chronic, critical, terminal illness. Let me explain to you, what that means. Let me explain to you what that means. I actually have this written down. So, anyway, if you can't do 2 of the 5 daily living activities, can't feed yourself, can't bathe yourself, can't transfer yourself, you can't dress yourself. If you lose 2 functions for more than 90 days, that'll qualify you for the chronic or critical illness, which means that let's say, you have enough mortgage protection to cover your whole mortgage, will actually accelerate that death benefit for you to pay either monthly or you'll get the lump sum. How does that sound to you? So now you're selling the living benefit. So you don't need to die to take advantage. So the main, now besides that, do you have any other life insurance? Because this is another objection that they're going to come back with, that, oh, well, do I really need this? I got life insurance. Do you have any other life insurance? Yeah, I got some life insurance. Is it through work? Is it through, most of the time it's going to be through their job. If it's through their job, you're going to ask them, do you know the difference between private insurance and insurance through work? They're going to say no, because they don't know. So basically, the main difference through, your work insurance is, that's good that you have the work insurance. It's what's called, for income replacement, which means, you already know how much they make. You make like $70,000 a year. So that's your income. Usually it's 3 times your salary. So that's your income for 3 years. After that, more than likely, if your family's still alive after that, do you still think they're going to need money after that, right? You think they're only going to be good for 3 years, or do you think they're going to need more money after that? They're probably going to need more money, right? So the other thing is that income replacement, the work insurance does have a death benefit because it's life insurance. That's all it has. Mortgage protection has 2 extra benefits besides that. That's why they call it mortgage protection, because it's designed for the mortgage. So we already talked about it has a death benefit, it has the living benefits, and the last benefit that it finally has is also return of premium, which means that at the end of the 30 years, how long is your mortgage? Oh, by the way, guys, that's another question that you have to ask up front. How long is your mortgage for? Is it for 20 years, 30 years, 15 years? Assume they say 30 years. So after the 30 years, when your mortgage is paid off, when you're done with the mortgage protection, you have to get all your money back. Okay? So there's 3 benefits there compared to the insurance that you have at work, which is good. That's a death benefit, but also understand that that is insurance that you cannot take with you. That's your job's insurance. It's kind of like renting a car. It's kind of like having a company car, actually. When you actually leave your job and you have a company car, you got to give those keys back. So it's the same thing. So that's the major difference. And so mortgage protection is more designed for your mortgage, and it has living benefits. So now you pretty much handled all the questions, right? You answered all their objections pretty much. The next objection we're going to handle is the price objection. So now we get to the end, we explain to them exactly, how it works, and I'm going to ask them any questions. Oh, and I also tell them, listen, so this is a win-win for you either way. So if you die, your family gets money. If you live, you get your money back. And if you get sick in between, they pay you. So either way, it's a win-win for you, right? So do you have any questions before I go on to the pricing? So they're going to say no or whatever, answer their questions. Now, I'm going to say to them, look, the thing is that we talked about affordability. You know your budget better than me, right? So at this point, you should be able to figure out what they qualify for. So if they're younger people and they qualify for the regular mortgage protection, I'm going to offer them the term. I'm going to say, look, based on what you told me, budget is important, but you know your budget better than me. So if I could cover either most of your mortgage or all your mortgage, we need to see what's affordable for you. So is something affordable for you that's between like $49 and like $90? Are you are you comfortable with something between like $100 and maybe like $150, or maybe something between $150 and $199? What's something that's very doable for you that can maximize the mortgage protection that we're trying to get for you and your family? They're going to tell you like, oh, I could do like $150. Once they tell you that price, they're not going to come back and say, I want to think about it, because they gave you the price, right? Usually the objection is that they don't understand something or they can't afford it. So now we've covered all the objections and you've gotten to the end, and they've told you what they can afford, and now you should show them 2 options. So you show them an option a little bit higher than what they showed, and something like around what they showed or maybe a little bit less, and then you just tell them, okay. And both of them, if they're younger, I'm going to do return of premium, and I'm going to cover like maybe 100% of their mortgage and maybe 75% of their mortgage. Let them choose. And then once they decide, then you just tell them, okay, so we're going to submit this. We're going to submit this to the carrier. We still need to see if you get approved. And, it'll take a few days. As soon as we get approved, you get your paperwork in the mail, and we can go over the policy with you. So I need to see your driver's license. And that's it. They're going to give you the information. So that's pretty much how it's done, guys. Do you have any questions? What's up, Dion?
With the form that you have displayed on your screen right now, so you sort of like have to fill out the form before proceeding to the e-app, or do you just do them simultaneously?
No, you got to fill out the form, because the form is going to give you the form is really there to handle objections. So you have everything, and it looks professional when you're writing all this down, right? You're not just asking them and writing them on a notepad. They're more likely to answer your questions on this. another question I should say I forgot to ask in the beginning is, when you look at the wife, like how much income are you going to lose if something happens to John? And that's another way of finding out how much money they make. So you got to find out.
So that's only if John is the breadwinner, though, right? But what if the wife is a breadwinner? Ask John the question about the wife, right?
Yeah, you can ask. You can do the vice versa.
Okay.
Say which health issues will automatically disqualify them?
Okay, that's a good question. So if they're like, these are just like suggestions, okay, guidelines. If they're in their like 50s and 60s and beyond, I would talk to them about equity protection. Unless they're like really healthy and they don't take no medication, I would talk to them about equity protection, not mortgage protection. And that's why we talk about upfront. We don't need to cover your whole mortgage to protect your mortgage. That's why I say that. Because if this went south and they were like, well, my health, like if their health is not good, because for term, you really need to have good health. They're not going to qualify for term, and you don't want to offer them, you don't even want to talk about living benefits if they're not going to qualify for it anyway. So that's why we got to ask the health question. So let's say they're your typical final expense client, right? Now remember, this is a concept, but you're going to get seniors that are applying for this, because right now seniors are buying homes, right? So if they're having health issues, even for final expense, if it's minor, for mortgage protection, it's like a big deal. Like if they have anxiety sometimes, and they're taking pills for that, there'll be some plans that they won't qualify for. If they've been in the hospital in the last couple of years, they won't qualify for mortgage protection. So that's why you got to get down all the information. And most of the time, younger people will qualify because they don't have health issues. But the older ones, you're going to have to put them into a final expense policy, but you're not going to call it final expense. You're going to call it equity protection, right? So once I figure out, if they're old and I start asking them questions, and they start telling me that, they take all these medications, I'm going to tell them straight up, look, mortgage protection, we have two programs. We have mortgage protection and we have equity protection. Based on what you're telling me, you're not going to qualify for mortgage protection. Mortgage protection, and not only that, but it's going to be very, very expensive for you. And, we want to make sure that this is something that's affordable for you. It's going to be very expensive for you. And not only that, if they're like 60 years old, the most you're going to qualify for mortgage protection is maybe like 15 years. You told me you have a 30-year mortgage, so it's not even going to cover your entire mortgage. So it doesn't make any sense. So an equity protection program makes more sense for you. And then you explain to them how that works. Where basically, before you go into any of the benefits, you don't even talk about those living benefits. Once they, you know that they qualify for equity protection, don't even talk to them about living benefits because they're not going to qualify for that. Just tell them, look, so we have a program, remember I explained to you how over the next 10 years, your mortgage is going to get paid down. But what I didn't tell you is guess what's going to go up? Your equity. Your equity is going to go up. So you have $50,000 worth of equity. The rate that homes are going up, let's just do 3% inflation. In 10 years, that's 30 years, right? I mean, in 10 years, that's 30%. So if we add 30% to your $200,000 home, we're talking about another $60,000 worth of value. So you'll have more closer to like maybe $100,000 worth of equity. So that's the real mortgage protection. So what we want to do is we want to protect that equity in your home, buy your family some time, because if they don't have time and they lose the house because, they're not going to be able to afford to pay the mortgage based on what, remember, and if you ask the question up front, like how is this going to affect you financially? Will your family be able to stay in this home? They already told you no, right? So now you're just going to reiterate that back to them. You told me your family could not stay in this home for more than 3 months. So equity protection will buy your family that time, because if you don't have this, then what's going to happen? The bank is going to take your house. And at that time, at that point, Mary, you don't even worry about how much you owe. Worry about how much money you have inside this house, because they're going to take that. The money that you owe, that's not even something that you should think about. You should be thinking about all the money that's yours inside this equity, and that's what the bank is going to get. So we want to make sure that they don't get that. So,
Will you ever have to do a phone interview, like final expense?
oh, final expense?
No, will you have to do a phone interview, like for any reason?
I mean, it depends. It depends on which company you use, but I would just use American Amicable.
Okay, so it's no phone interview with them.
It's just you know what? You don't even just do the e-app with Mutual of Omaha, or do the e-app. You don't have Royal Neighbors, right, Jeremiah?
Right.
Okay, do the e-app with Mutual of Omaha, and do the e-app with American Amicable.
Yeah, I think with American Amicable, I think if the client needs a phone interview, I think there's like a prompt that comes up, and they would tell you to either call them or not call them. If the prompt comes up, they want you to set up a phone interview. That's like based on the me watching some of the trainers that they had on their side.
No,
They said that normally.
that's, I don't think they do the interview anymore. It's just a voice signature.
Okay.
Yeah, they don't even do that anymore. Just do the app with that.
Is it a section on their application that says like the list of certain disqualifications?
Absolutely.
They're not eligible for coverage under such and such?
Yeah, let me show you.
Okay.
Jeremiah.
Mm-hmm.
You know why? You know why I decided to do this?
Mm-hmm. Why?
We got 100,000 leads in the CRM. They're like unlimited leads, and they're only $4.
Right there.
So is it like mainly because like they just weren't answering the phone, or they just the agent couldn't track them down or something?
I'll explain to you in a second. But look, this is a Mutual of Omaha app, and all you got to do is just read these questions. That's why, like I tell you guys, don't even bother learning the products because they're so easy. Learn the sales strategies. That's what's going to help you sell. I've sold plans that I've never even I literally just opened up their app, figured out like within like minutes, can this guy qualify for it based on this? Yes or no. That's it. So you just read these questions real quick. Okay, he doesn't have this, she has this, she doesn't have that. Okay, she'll qualify. Let's put it in. That's it.
Oh, I thought the mortgage application, it was different from the final expense app.
It is different. But
oh, but it looks the same though. Oh, okay.
Remember, final expense is a concept. You can sell final expense to somebody who has a mortgage. It's just a concept. We're using what they want to sell them insurance. If they want final expense, we're going to use the same policy to sell them final expense. If they want mortgage protection, we're going to sell the same policy, but say it's mortgage protection because that's what's important to them in their mind. I want to protect my mortgage. I mean, come on, you know, life insurance will protect you either way. It's just money, right?
Okay.
It doesn't matter. We use this concept, final expense, because the people want final expense, and this whole life policy is the best way to get it done for them.
Okay. So, well, I have them and MM, so I'm good to go.
Yeah, and you know, before you just know this, if you have people, it's just like really simple with mortgage protection. Like if you see younger people, like unless they, you know, if they've been in the hospital or if they've had like surgeries and stuff, don't even bother. Most young people are not going to have any health issues, but if they do, then you know, they're not going to qualify for the term. Then you're going to have to go, because remember, Mutual of Omaha goes down to like 45,000. I mean, 45 years of age. And so MM goes down even lower.
So if you say surgery, you say what about like cosmetic surgery, like people getting implants or whatever
No,
the
that's
case is?
it's something that's like, you know, if they were like hospitalized.
Oh, okay.
That's what we call elective surgery. We're talking about like, you know, if they had like surgery because they have like a chronic health condition.
Okay.
See, I'm gonna ask something about the final expense, MM. You said there's no voice. Is just a voice signature now, or?
Yeah, it's a voice signature, and all you do
Okay.
is when you get to the end of the e-app, they're gonna give you three options.
Right.
One is like a signature on the screen. The other one is they can email it to you, and then the third one is voice signature. So you click the voice signature,
Okay,
that's
cool.
the e in front of you. You can just do the one on the screen.
Okay, cool.
But
And
the
that's
voice
pretty.
signature is like telesales.
That's pretty neat.
Yeah, it's
All
pretty
those
amazing.
options.
Yeah.
And MM, listen, let me tell you something about MM. They're the only company that when you get to the end, they'll give you a list of the medications. Nobody else does that. They'll give you all their medications that popped up. And let's say that they
Okay.
decline you, right? At least now you know what medications they're on. Like the real, not what they told you, but what's in the system.
Right.
Now you can use that to go somewhere else if they don't approve you.
Right. Okay, cool. Right. Yeah, I gotta go do some today with MM.
Yeah, like I think like the form that you had pulled up earlier on your screen, I feel like once you have that handy, you can sort of already know if that person is going to qualify based off of information that you put on that form before you even get into the e-app.
That form is what's gonna really help you now. I want to show you something else about that form, right? This form you can use to get right back into like debt-free life. Because it has some of the questions down here. It has all the questions. You can just read it. Just tell them we need to do a survey. So it's just another sale. When you guys start doing like, you know, debt-free life, I had somebody on Slack the other day put up their first debt-free life sale. It was like $11,000 premium.
Wow.
That was their first debt-free life sale.
Wow.
Only imagine the commission on that.
Yep. No, that was his
Goodness gracious.
Man.
Said that a premium?
Yes, that was that's the commission.
That's
God.
crazy.
Oh my goodness.
Yeah,
Damn.
two.
Oh.
She called up for old clients. She did two. She did one for 6,000 and one for 11,000.
What's the commission on that?
Wow.
That is the commission.
Crazy. Right?
Oh,
That's the commission.
oh gosh.
That's what that person's taking home with them.
Yep. Goodness.
Yeah, that's crazy.
So we got all the tools, guys.
We're next.
We got all the tools. You just gotta get, you just gotta, what is it called? You gotta grind. That's it. In the beginning. Got all the tools. I've given you a mortgage protection presentation that sells. I don't know if I told you guys. Well, I told Diodon. I did 4,500K on Friday with the same presentation.
Wow.
No, that's good too. One day, yeah.
That's excellent. That ain't good. That's beyond good.
Yeah, so we got all the tools.
Tell it.
Got all the tools.
Yeah, I'm probably gonna go do some door knockings today because this is motivating me. I gotta get out and go do some door knocking.
Yep. So I have, the good thing is I recorded all this, so I can send you the recording. Now, I will say, like, kind of like a disclaimer, like, we're doing this. There's things that I forgot. I can't even think think of right now, say, but you know, they're not like 100% vital to the present. You have the basic structure that you need. Certain things that I can't think of right now, but if you guys use this presentation, you're gonna have a lot of success.
Do you have that
Definitely gonna
presentation
get
on
into the
paper?
Huh?
Okay, he can go ahead.
No, I wasn't gonna say anything. Jeremiah, you're due.
You have that presentation on paper, or we just have to keep?
But that's why I recorded this video, so you guys can just like use it and write it down. But the
Okay.
main thing is you need this form. All right, any more questions, guys?
Well, not from me. As always, Sam, I appreciate you. I appreciate your knowledge, your expertise, and you're always willing to share information and being transparent. And I've always said this to you every time, and I'm going to continue to say it. Thank you very much.
Thank you. I appreciate you too.
I appreciate it too.
Me too, Uncle Sam.
Jeremiah, I'm doing my best, man. I want you to become like that superstar that you deserve to be.
Yeah, you weren't. I mean, everything you said about that beginning process, you definitely knew what you were talking. It's tough, but I know we're gonna make it, man.
Wait, the beginning process of this presentation, or in general, you're talking about?
No, overall, just when you starting out and just getting your feet wet, and yeah, it's tough, but you got to hang in there, man.
Listen, I want to tell you something about. I've only closed like 10 mortgage protection cases, maybe 12 or 13 at the most, right? This is not hard. It's not hard. Like I've only done like maybe 13, and the first couple, I didn't even have no idea what I was doing. You know what? Let me tell you what happened the first time. I was working for this company, and the owner of the company, you know what he did? Oh my God. I was wondering why, and I couldn't really figure it out, but I didn't know any better, so I just did what they told me to do, right? They had printed out, like, you see these, you see our mortgage protection cards? You can tell that somebody filled this out, right? Has their writing and everything on it, right? You know what they did at this company? They didn't even have these. It was just like a printout. It was a printout. It has all the information, but I found out later that it wasn't fake, but nobody had sent it back. They told us that this is something that somebody was sent back, but it didn't have any writing on it. It wasn't even a card. It was just kind of like a printout. And I just went door knocked people because they told me that it was legit, and I closed cases. They didn't even fill anything out.
Wow, that's crazy.
It was just data. That was all. It was just data. Just data. It was just somebody that just bought a mortgage. They didn't fill out anything. They were not interested in mortgage protection. You know, they could have filled out a card, but I didn't. You know, they made more than likely the majority that didn't, because it was just data on a piece of paper, and I showed them that, oh, your mortgage is this. You know, you filled this out a little while ago, and they couldn't remember. Some of them let me in the house, and I closed them. And I didn't know what I was doing, and it was not even real mortgage protection. And I found out that like 3 years later, because when I came to this company, Chris Curry explained to me, he was like, yeah, you know that form that they gave you over there was like, it wasn't even a real mortgage protection lead. He was like, that's why I left. They were selling those for like $5, and it wasn't even a real lead.
Wow.
So people were buying them, and they couldn't close any of them, and they were like, man, like, what's wrong with me? You know, I don't know. And they were pushing it hard on the phone, but it wasn't even a real lead. But this, you know, is a real lead because it has their handwriting on it. that didn't have anything on it, and I still ended up closing a couple of cases. I would buy like 30 of those, and I would close like maybe 2 of them.
Yeah,
So-
I had similar experience with my previous company as well. With the acheive kit, some people didn't even request it, but they wanted us to call people and claim that they requested it. And majority of the time, we would set an appointment, but it wouldn't be for a acheive kit purpose. It would be for us trying to solicit and potentially sell insurance. But like we entice like prospect with a acheive kit to get them to agree to meet up with us. And when we meet up with them, we're talking about insurance. They're like, "What the heck are you talking about insurance?" Like, I didn't call for no insurance. I said I wanted a acheive kit, and it was never, it was a bad experience, to be quite honest. I mean, I've made some sales there as well, but it just wasn't really worth it because you would drive around town for like hours and not even see nobody. People would set an appointment and not even show up because they never even requested it. And it was just not a good experience at all.
You know what? The reason why I bring that up is to show you guys that if you have the tools, right? You have somebody that fill this out, you have a presentation, you know what to say. That's why it'll become easy for you. If I close cases where I didn't have anything, right? So you can definitely do this. This is not hard. Like getting in the house, like I'm gonna set the appointments up for you guys. All you gotta do is show up, like, whatever amount, like, because the majority of people, what I'm thinking is, like, let's say I buy 100 leads in PA, the majority of people that I talk to, they're probably gonna say, yeah, let's do it over the phone. There's gonna be a handful of people that are gonna say, no, I'd rather meet in face to face, and then you guys go and try to sell them. All right, so I gotta get prepared for my next call, guys. Anything before we get off? You guys are good?
Yeah, I'm just gonna if I do end up meeting these people and I need you to hop on with the Zoom
Yeah.
and talk about the
Just let me know in advance.
that relief, yeah, definitely I'll let you know.
Well, the debt-free life, this is what I want you to do. I want you to like fill out the form and ask them, and then tell them that within like 24 hours somebody's gonna call.
Oh.
I was talking about like if you need help in the home with this, get me on Zoom, or if you want to the first like maybe 2 times, we'll go into the house together, and you can just say I'm the product specialist.
Okay.
That's why I'm on the Zoom. Just say either like, Lance is calling me. I don't know what's up. Anyway, guys, let me get going. I'm gonna take this call, but we will. I'll do that for Zoom.
All right. Thank you, Sam. Appreciate it.
Take care, guys.
Yeah, thanks a lot, man. All right, thanks.